morning, everybody. I think that we've heard all the things about the post-pandemic environment, and now we're suffering an RMT train issue. So for perseverance, for getting here this morning, thank you so much. It's good to be at an in-person event. As Julian introduced me, my name is Mike Chambers, and a friend of mine called Jo, she said to me, Mike, it's not about who you were, it's about who you are. But let me just give you a bit about who I was and what I've done before to position what I'm going to share with you today. It was my privilege to run the UK's systemically important payment systems for over a decade. So I ran BACS, I've run CHAPS, I formed Faster Payments, I launched the current account switching service and ran that for the first few years of its operation. So I really cut my teeth in payments and then experienced some time running systemic important payment systems. And as much fun as that was, I'm having much more fun now in a portfolio environment. So what I'm doing in my portfolio environment is thinking about this old adage that a payment is a payment is a payment. They're all very vanilla. They go from one end to the other and sort of pop up in somebody's bank account, and dispelling that myth with the fact that the value chain of a payment is very complex, but also there's loads of opportunities in that payment chain to add value, whether you're looking at getting rid of fraud, addressing fraud, whether you're looking about adding data points within a payment going through, whether you think about the security harness that sits within a payment, whether you think about the channels that a payment needs to access and flow through. It makes it very complex but very exciting. And having been in payments a long time, there is nothing like the innovation that's going on presently. And it doesn't matter whether it's north or south. This is about innovation in the UK standing well in a global payment environment. So my current portfolio is payments with a twist. I'm going to share a few things with you today. These are some of the things I'm going to be sharing with you. I'm not going to go into detail here, but I pick each one of these themes up as I talk through. You'll notice in the corners the words digital swag. You know what it's like. You go to a conference, you take an umbrella, a pen and a notepad home and don't really do too much with them. When I get to the end of my presentation, I'm going to offer you a 3-year subscription to my newsletter, Payments Unpacked. I know there's already some readers in the room. I'll offer you a year's free subscription, which is worth 50 quid. So the price you pay for your ticket today, you can get back or double your benefit in terms of a year's free subscription. So hang in for there. There'll be a QR code and a website you can go for. But you can't talk about payments without thinking about cash. You can't think about payments without thinking about where we've come from and analog payments, in the words of notes and coins. We've had notes since about the 800 AD in China. We've had pound sterling since 1500s in Great Britain. And cash, the use of cash to buy the goods and services we consume, has been a fundamental part of the way we do business. And we have, as we transcend from an analog to a digital world, a transition that's been accelerated by COVID and reflecting a wider societal shift as well, you have to think about where we are presently with cash and what that means going forward. I'm absolutely cashless. I haven't touched a note or a coin in about 4 years. If I can't pay electronically, then I have to go without. Fortunately, these days it's very, very infrequent that I'm in that position. But there are a lot of folk in the UK that rely on cash. Now, some of it is because they need to, some of it is because they want to. And I'm very much of the school of thought that payments choice is important, but choice shouldn't just be about preserving cash for cash's sake. We should make cash available, but equally we should support folk in that journey from an analog to a digital world. So as I position my talk to you today, I've got to think about where cash is and where it's going. There are about 31 million cash transactions through ATMs a year. It's very difficult to think about how you quantify the use of cash. I use the acquisition of cash through ATMs as a good proxy. It's not perfect, but it's probably one of the best ones. 31 million transactions a year. Week on week in 2022, it's almost flat. Our habits are quite constant. Those in that cash environment are pretty flat. If I look back to 2001, it's about the same, so we haven't seen that change in 12 months. If I look back 2 years exactly, there's about 20% more cash ATM withdrawals going on. But of course, 2 years ago, we were stuck in lockdown. We couldn't go out and spend any money. If we did, it's probably over a card and we had an Amazon delivery, but we couldn't spend the cash. So you have to go back to the week before COVID and say, what were we doing as a population in the UK? What were we doing in terms of cash habits compared to now? And if you compare that week before lockdown to last week, the cash acquisition in the UK, the best proxy I can think of for use of cash, has reduced by 26%. So we've seen those 26% reduction. Those people are still buying things. They're probably buying a bit more than they did through COVID, but they're obviously doing that in a digital world. But that's presenting us three challenges in terms of the use of physical cash. The first is very much tied with the physical branch, the bank branch, the bit of bricks and mortar. We are seeing banking deserts being created in parts of the UK, and by doing that, the acquisition of cash becomes difficult for folk. So we're seeing a lot of alternative solutions. I don't know if you saw earlier in January, it sort of released to the public, but cash back without purchase, the ability to go into a convenience store, get some cash and do something with it. We're seeing independently deployed ATMs. We're seeing Link the ATM network looking at areas and working out what the solutions should be. And against that backdrop, we're seeing some legislation going through government now around the ability to access cash and spend cash. And as I said before, we've got to be careful that we don't preserve cash for cash's sake, that we actually think about encouraging people to digital solutions. And as we think through where this might land, we are in a less cash society, we're in a cashless society. That divergence will become closer over time. We have to think about the role of a CBDC entering into the UK. Now, the Royal Society of Arts do not sound like the sort of organisation I would talk about today, but it's headed up by called Andy Haldane. If you know Andy, he was an executive director at the Bank of England. I know Andy, and I thought he had great paths within the old lady at Threadneedle Street. He's ducked out and pitched up at the RSA. And as part of that, we're now seeing some interesting work by the RSA. And these slides will be referenced in the output from today's session. Wherever you see a hyperlink, we'll provide the link in the notes after this conference for you to get into the data there. But the RSA did some work which talked about, actually, if you think about people using cash from the minimal amount to a maximum amount, 96% of UK population are still touching cash at some point with different frequency. So even if we think our clients and our end users are digitally enabled, our digital advocates, they're still touching analog money. And it's about, if you're into that digital space, how do we encourage people through? But then there are whole sectors of the UK population, by geography, by socioeconomic class, by whatever, are stuck in that cash loop, that analog cash loop. And we need to think about how our solutions really empower these people to move forward in a digital environment. So I've talked about the 3 points on the screen of the 3 recommendations that the Royal Society of Arts came up with in a recent review they did. I've talked about how you keep cash infrastructure viable. That's going through legislation. I've talked about how you avoid that cash desert in terms of those that need cash. But also, it's all very well having a tenner in your pocket. If you can't spend it when you go to a shop, if acceptance is an issue, then actually that whole loop of analog money is an issue. So there are some fantastic opportunities going out at the moment in terms of the use of using cash with QR codes and converting that physical cash to an electronic payment. And I've mentioned about supporting people with digital transition. The link will be in the notes to this, but it was really interesting. We all say, well, of course, during pandemic, during everything, we all adopted new digital stuff. We did things differently. Mastercard did a review. I think it's 35,000 people, and they looked at they reviewed that. They spoke to the people about, are you making direct bank to account payments? Are you using open bank initiated payments? Are you using BNPL? What about crypto and QR? And as you might expect, the propensity of folk to use those sort of things during the course of a year was quite high. They looked back and it was 83% in terms of, yes, I've used those in a year. But even within those people, 93% said, I'm going to do more in the next year. When you get the notes for this and you get the link, drop it down and look at this report. It's about a 5-minute read, 4 or 5 key insights that are really helpful as we start to think about digital payments and where payments ought to go. And you quite naturally talk about convenience, flexibility and control. The interesting for me one here is when they talk about security, the interest rates are lower. The amount that people are bothered about security is quite low. I thought that must be an anomaly, that can't be right. But of course I've now found 2 or 3 other points where in fact people don't care about security until it goes wrong. And how we get that message over around making sure that our products and our propositions and digital payments are absolutely secure and can be trusted on, just as much as that tenner in my pocket, is vitally important. Later on today, Peter will be talking from Answer Pay around Request to Pay. I'm not here to talk about Request to Pay in my talk to you, but one of the things that we'll see in the future of payments is the choice will be in the hands of the consumer, the end user, the person actually making the payment from their bank account. And it's all very well, if you look back to payments in the past, it's pretty much get what you take. You want a Sky, you want an O2 phone, you have to have direct debit, you have to let me dip into your bank account and take the money out every month. We're seeing the choice within payments about how you pay, when you pay, and who you pay being absolutely vital in terms of success of fintech in terms of the success of future payments. People want that, and they want to be empowered. They want to be in control. They want the convenience of payments. There are attributes on this screen that Peter will be talking about in the context of request to pay later that actually transcend that payment product, but also others as well. We have to get in a mindset that the end user is expecting a lot more choice, but a lot more control. Another theme that we're going to see in payments in the coming years is this real issue around fraud. Now, whether you call it APP fraud, whether you call it CEO fraud, whatever fraud you call it, it's still fraud, and there's a fraudster who's benefited from that with their pina colada in Malaga, really enjoying themselves, and the poor person in the UK is the one that's trying to rectify their account and got the stress. The theme that we're seeing in terms of that payment certainty is around being sure who you pay. So as you're thinking about your payments products, as you're thinking about your propositions, how can you be absolutely sure that when someone initiates a payment through your platform, that they would definitely reach the person they expect to reach? And we thwart the fraudster. Because if you go to the UK Finance website, and the stats are a little bit out of date, I keep waiting for the next set of stats. Whatever stats you look at from UK Finance, those numbers are eye-watering. It is embarrassing that as a payments industry, we're allowing so much fraud to happen. And we've seen that as we went into digital payments, particularly with faster payments, where faster payments initially meant faster fraud. And we've seen some of that close down, but we're seeing more and more sophistication in terms of the fraudster. It's eye-watering and it's embarrassing. I'm a great advocate of confirmation of payee. It's not perfect, it's not a silver bullet, but frankly, when I'm making payments, I feel much more confident now that it's going to end up at the right place. And I also know that if it doesn't, and I've had a positive response back from my bank, I've got more of a case when I go and challenge the money that may have gone wrong. So confirmation of pay is not a silver bullet, it's not the only solution, but it is a great example of how we can start putting stuff at the front end and dealing with fraud before it happens, rather than trying to deal with the fact the fraudster's on the beach and I'm trying to get my account rectified and I've got all the stress, the hassle, and the banks pay out. Because whatever you think of banks, I say this as an ex-banker, they're not charities, they're here to make money, and they cannot keep repaying this money. So just as it's incumbent upon them to sort themselves out in terms of fraud, we as part of those payment chains need to think about how we can be absolutely certain that people are sure who they're paying when they're making a payment through our platforms. So payment certainty is important. I know we've got the PSR up here earlier on. I'm looking for a PSR person. I can't. Oh, there we go. And we've got the PSR talking a little bit later around some of those works. There's a consultation going on presently. It closes in a couple of weeks around confirmation of pay and extending the reach to about another 450 institutions. If you're interested in that space or involved in that space, you must go to the PSR's website and look at that consultation and influence in that. I'm very much of the view, and I comment on this quite a lot, and I blog about this quite a lot, about safer payments need service ubiquity. We need to make sure that we have the protection of payments when they go through, that we're sure who we pay. And I put the slide at the bottom as a timeline. I was with Vine, an account-to-account open banking firm, on Monday, and I felt, to be honest, very old in the room. There were a lot of very young, very, very clever people, and they were incredulous about how long things take to happen. And I have to say, I sounded a bit like an old person and a bit like an advocate for time. I certainly wasn't. But as you talk to about the speed of some things that are happening in our industry, it's absolutely amazing. We need to see that trickle down to addressing fraud and being certain about who we pay. So support the confirmation of pay response from the PSR. Get involved. If you're part of that chain, why wouldn't you cover your customers with that benefit of confirmation of payee? Now, we talk about the future of payments, and here I'm talking about a direct debit product that is 50 odd years old. Now, there's some debate about whether direct debit was released in 1968, 69 or 71. If you're a purist, it's 71. If you want to make it older, then it sounds like it was 68. But I brought direct debit to the table today for two things. One, because I still think there's life in the old dog yet. And secondly, it has a lot to teach us as we think about the future of payments and what people are looking for. So direct debit is absolutely embedded into the way we work, the way corporates work, the way billers work, but the way we pay for the goods and services we consume. 92% of bill payers use direct debit for a regular payment or more. We have a number in our accounts. I spoke to some of my ex-colleagues, some of my friends over at pay.uk, and they've shared with me three things from a piece of research they've done. This isn't public until today. They've allowed me to share this with you today, and they're going to be using it going forward. But they did some research around people who make regular payments. And for me, both in terms of direct debit and the future of payments, it told me some things. It probably told me the thing I knew, but that 74% said they want to automate their payments rather than making payments and dealing with things individually. You know, we're all time poor, whatever we're doing. And as we think about whether it's direct debit and our use of direct debit, particularly other payment types going forward, it's how we automate our payments, how we make it easy for the people to make the payments, that they spend less time panicking, worrying and playing around with their bank account, that we make their life a better place. And by doing that, we make people sticky. But when you spoke to the people, when Pay.UK spoke to these people around words they associate with direct debit, they talked about easy to use and convenience and reliability. They are, to some extent, motherhood and apple pie. But if you're involved in payments and you're involved in new generation of payments, how well do your propositions stack against some of those criteria? Because almost every adult in the land is using direct debit and they associate that product with those sort of attributes. The interesting thing, as I said about the Mastercard work, is that about the security in Pay.UK survey, 66% said direct debit is secure, and yet you let people come into your bank account as often as they want and take the money out with a guarantee that sits behind it. We need to think through this security thing, because folk are only happy until it goes wrong. The scores fared well in terms of other payment types, and that's sort of an aside for Pay.UK. But from my point of view, we've got a situation with direct debit where I'll talk about the future of direct debit in a moment, but it has a lot to tell us about how we make digital payments successful in the future. There'll be a link, you won't read this, I suppose you might, on the side there, but you'll see this in the notes that come out. I've just done some work with Access Pay Suite around how the effect of inflation, what the effect inflation will have on subscriptions and subscription payments. You could probably extend that also to any form of reoccurring payments. And as we go into a particular economic downturn, what's going to happen first as we tighten our belts? Those discretionary purchases around reoccurring payments, the Netflix, the Sky, the mobile phone, whatever is going to be narrowed down and used. So there's some work, you'll see the link as the notes come out. There's a whole thing there about if you're involved in reoccurring payments, at whatever level and however you take the money, some of the things you can do around adding value, being flexible in terms of the payments, communicating well with your clients. So there is a particular juncture here if you're involved in any payment product that has a discretionary element. If you don't get those attributes right and treat the end user well, as that belt gets tightened, you will see the attrition in those customers. But of course, there are many new ways to pay coming along down the track, and Peter will be talking about request to pay later on. I'm not going to go into that, but what that does is turns direct debit on its head. Instead of me coming in and drawing money from your account, I ask you if you'll make this payment, you'll pay this payment. You're putting control into the end users. I've spoken to the guys at Vine Payments the other day talking about account-to-account payments. Would not have happened without this, what I call a fairly recent, in banking terms, launch of faster payments, but 2008 sounded like a dinosaur to a lot of people in the room with me on Monday. But without having a near real-time or a real-time, depending on how you look at faster payment solution, account-to-account payments are using open banking initiated payments would not be possible. We've got that fantastic bedrock of faster payments, but actually starting to exploit how you use open banking to leverage those account-to-account payments is really important. As we go through into the summer, we'll see the CMA 9 mandated banks launch variable recurring payments for sweeping, me-to-me payments, the ability dynamically to cover my short position at one bank account with a long position, another account, avoid overdraft fees. You know, we're going to see that roll out. The real challenge or the real opportunity comes as that transcends and changes into a more commercial variable recurring payments situation. You start to be able to offer people paying recurring payments, saying, well, you can come into my account, but only for up to a tenner. You can come into my account, but don't come in for 11 times because at 10 I'm cutting you off. You can come in at this frequency. It puts that control. Now, how we don't make that too complex and difficult for the average person to run, well, I'll leave that for the people that come up with the solutions. But we start to move variable recurring payments from me-to-me payments to a more subscription-based, a more reoccurring, a more paying for things. And it might start to address some of those things about, buy now, pay later in some of the installments. I've seen some great VRP ideas around buying festival tickets. You buy it over time, but of course the festival ticket's not released until the end. So you haven't released the good or service, but you've paid in manageable chunks. There's no scheme around this. There's no commercials around it. There's no framework around it yet. We'll see that coming in a few months. There's a few people out there playing at the edge, but watch out for variable recurring payments. I've talked about installments and subscriptions. I'd also pick up, as we come out of post-subscription, thinking about micropayments. Now, people have been involved in micropayments for a long time, have never really got this together, in my view. You know, we invented the internet, we chucked everything on the internet, we said, come and take our goods and read our stuff and have it for free. And we created this free model. We then realized that wasn't commercially viable, so we had to put things behind paywalls. So we put things behind paywalls. For a chunk of money you can consume, you can eat as much as you want. Of course, that's fine if I want to eat as much as I want, but if I just want a prawn cracker, it's quite expensive. We've got to get to the point where we can sell through micropayments biteable chunks of information, biteable chunks of access to something. And I think we'll see if we can do that in an economic way, we'll see open a whole new way of making payments. And I finish, I can see the typo hasn't been corrected on the bottom right. So when I say Paul, I mean a different sort of Paul. But I really think we're on the cusp, and I'd really advocate the cusp of direct debit, what I call direct debit 3.0. And the point about direct debit 3.0 is saying that, you know, as individuals, we're paying for more things regularly. We're paying for things, you know, on a recurring basis, everything. Actually, sometimes this works, sometimes that works. Direct debit has a particular clearing cycle. It has a particular proposition, has a particular liability model. You know, we need to bring that up into the current decade. But as we do that, why don't we put in variable recurring payments into that direct debit sandwich? And as part of that, have some of those attributes of VRPs within the concept of direct debit today. While we're at it, why don't we bring request to pay in there as well, and actually have a schema in the UK that would lead the world in terms of offering people the ability to pay in a way that works for them in a very efficient way. So watch out for direct debit 3.0. We've got some folks from open banking sharing with us later. I'm not going to go into open banking. I've talked about the significant impact it's already had. You know, we've done the aggregation, we've got the nice charts, we've got the data, we're doing some account initiation payments. I particularly like that. I think it's fantastic what EcoSpend have done. We're also thinking about you know, variable recurring payments and using those things. You know, we're going from that point where we end up from open banking to open finance to open data. And I've just stolen this slide, well, top left from OBIE, so congrats to those guys for getting up to 6 million active users. But the other two slides are from Tink. And for me, it's all about that bottom right-hand bullet point. We will know when open banking and open finance and open data is truly delivering what we need or benefits to the UK population, when not only has competition arisen and competition being driven, but we are seeing tailored financial solutions and we are improving the overall financial health of the UK population. At that point, we will know that we've been an absolute success in what we call today open banking, because instead of me getting a vaguely appropriate proposition from my bank or from a PSP or somebody to offer me money at a certain rate, or to provide me a proposition based on where I live or anything like that, if I'm getting a tailored proposition to me, a tailored thing that works based on my data points, or based on my actual history, I'm getting it that's appropriate for me, and it will improve my financial health. For me, numbers are great. For me, different solutions are great. But until we start really proving that we're making a difference to people's financial health, and we're making a difference to people's receipt of tailored information, that's when we'll see the success. Just as I finish, I just wanted to give you a challenge. Do you know what? I struggle to find out how you spell czar. It seems an English and American, so I don't know whether you work English or American. But you know, if you look up the definition of a czar, it's a high-profile appointment of somebody who devotes their skills to one particular area. I'll give you two challenges today if you're involved in payments and in the payment space. The first is I won't encourage you to get your phone out now, but look at your phone. Look at those financial apps on your phone. I need another financial app, like need another TV streaming app, another car parking app, another music app, or another sat-nav app on my phone. We've got to think about, if we're going to live in an aggregated world, if we're going to empower the end user, if we're going to really allow people to make payments the way they want to pay, if we want to put them in control, how do we present that out without a proliferation of apps on our phone that are in a very disjointed way? And secondly, I think I'm fairly technically advanced. I've been digital for a long time in every aspect of my life, and that includes money. But do you know brain fog when I stand in front of a parking machine? Whoever designed these things needs to be put in the tower. But I would suggest to you that every time you look at one of those, and I use Ringo actually, if I'm honest, but you know, sometimes you can't, and you've got to do these things with a tap and pay and a card. But when you face that car parking machine, just think about the embodiment of friction that you are facing, they are an absolute nightmare. They're badly lit, they're badly designed, they're badly angled in terms of doing what you need to do. They are just so complicated it is untrue, with number plates and all the rest of it. They are an embodiment of friction. Don't assume that banking and payments are immune from that friction. And just every time you stand in front of that parking machine, just use that as a prompt to you. If I'm involved in payments, if I'm involved in fintech, if I'm involved in the future of people managing their money and paying people, how do I make sure that I don't create that absolute piece of friction that either turns them off or puts them to a competitor, or just makes things go wrong? So think about proliferation, think about the friction of the car parking machine, and put those into practice. Just as I close, I said I'd offer you a piece of digital swag that was worth the value of your conference ticket today. I publish a newsletter called Payments Unpacked. Julian mentioned it. I know there's a couple other readers in the room. There is a free version, but there's also a paid-for version. For putting up today, you can have 12 months subscription to my newsletter. It's worth 50 quid, which is what you paid to come along today. So take away a piece of digital swag that I think will be far more useful to you than a conference umbrella, a pencil, or a notepad to take home and either leave in a cupboard or give to the kids. So subscribe today, and I'll update you for 12 months, and hopefully I can share with you some insights on payments over the coming year. Peter told me the QR code would work, but I put a bigger one there just to make sure. So thank you so much for your time today. I'll hand back to Julian. I really appreciate it. It'd be great to catch up with you during the breaks, but I appreciate your time. Thank you.
Thanks for kicking us off. I think, for me that was everything I hoped it would be when we invited you to do the opening session. We asked you to set the scene and sort of plant the threads for the rest of the day. So you've covered so much ground. We're going to get into those topics. Does anybody want to ask Mike a question before we move the agenda on? We can take advantage of having him with us today. So one of my you've got one. Yeah, go on. Yeah.
Some of the research you mentioned, I think it's an interesting contrast to people saying they like direct debit convenience. No, sorry, yeah, I'm going to all right, I think. Convenience, you're not going to do anything, and then request to pay in others require that intervention from customers. And so it's also kind of your thoughts on actually, is it a solution for a problem that's not there? In the sense of, I know people like control, but do you want, or like, will you pay us this month? Will you pay us this month?
Look, I'm an advocate of direct debit. It's from my view, it's 50 not out, and there is certainly life in the old doglet. The reason I say that is I ran direct debit for a dozen years. I took it up to 4.5 billion transactions direct debit a year, massive penetration across the UK, delivering all benefits and salary. I mean, sorry, that's credit, but in terms of direct debit, people paying for stuff, but built it up to 4.5 billion transactions. So I'm a massive advocate. But the thing I would say in response to your question is that there are different sorts of payments that you as an individual make. So sometimes a direct debit would actually work for you. You're absolutely happy to pay it through a mortgage, pay for your council tax, something like that. But actually, if you're buying a discretionary purchase, like a Netflix subscription or like a bit of airtime on an iPad, you might not be so comfortable with paying with a direct debit. You might want to have that bit more control. So I would say that so sometimes the types of payments you're making are different. And I think sometimes people are different. Sometimes people just don't trust direct debit and they want other options. Some people are in a financial cash flow that they can't risk a direct debit because there's not much money in their account and therefore fall short on their account and pay overdraft fees. So I think there's an opportunity for them to coexist. And I think it's around different people, different solutions, different scenarios. I think the mix is probably a bit wider as well. I think it's probably direct debit, variable recurring payments, and request to pay. And if you put that together, and when I say direct debit, I mean tomorrow's direct debit, not today's. You put that together, and it is a great set of solutions for different people in different ways that get away from an analog cash. They get away from the cost and the friction and the risk around card payments. So I think that the answer is probably a mix, and depending on the type of payment.
Thank you for that question. Anybody else want to ask Mike a question? But I'm going to squeeze one in, and then we'll move on. We're a little fluid with some of our timings today, but I always feel we've got a speaker. We need to take advantage of having their knowledge at the front of the room. You talked about fraud and different types of fraud and the challenges that we face in the financial sector, and I guess that goes right across all the developments in payments. I heard it said at a conference I was at recently that we're fighting a losing battle against fraud, and that if anything, we're getting further away, the fraudsters are getting further ahead of us. How do you feel about that balance? Because obviously we've got lots of new technology and sort of security protocols that are available to us. Can we close the gap? Are we closing the gap? Do you agree with that?
I'll salute anybody that does anything to thwart the fraudster. The idea these guys are making money out of very vulnerable people and sitting on beaches in Marbella with their pina colada does not equate well. I salute anybody particularly that tries to tackle fraud before it has happened. Dealing with stuff post-event is sort of okay. My account sorted out in the end, but the pain and the stress I've gone through is a pretty nightmare. So I'm pretty keen that folk do stuff at the beginning. I mentioned confirmation of payee. There's some as being not a silver bullet, but a great solution. But in the open banking world, there are so many things going on around the use of data points and probability analysis and dealing with using analytics, AI and ML in terms of working out what's going in flight. And helping the person receiving the money decide whether they apply that money to that account. And of course, if they get that wrong and you miss your house purchase or lose your car, you're pretty annoyed. But actually, if it thwarts somebody taking away the money. So I'd salute anyone doing anything. Pre-event, not post-event, is my thing. In terms of your question, do you know what? 10, 15 years ago, a bit more, we'd have been talking about check fraud. Then we were talking about card not present, and then we were worried about contactless pay. Fraudsters, they don't really care, to be frank. They're just going to go for the next weak spot. So, they go for a weak spot. And I talked about, faster payments can mean faster fraud. All fraudsters are doing is getting our next point of vulnerability, and this is where it's at. So that's why we need to address it. Will the fraudsters go away? Of course they won't. They've just gone to the next point of vulnerability. So, it's a bit like squash the rat, squash the mole, whatever it is at the fairground. We've got to bang this one and then we've got to sort the next one out. But we won't ever stop it. What we've got to do is to make sure that we make life as difficult as possible for the fraudster.
Thank you. Right, James has got his hand. We're just going to do one, Dave. Sorry, because just to keep things.
I don't think you have so many questions so early in the morning. So
you get a mic at the coffee break. So James,
I don't think I need this one. Just linked onto that fraud piece. My business a business I work for, we do quite a lot in the gaming industry to prevent problem gamblers betting, and the big change in the ability to stop and prevent them logging on to UK gambling sites came through legislation. So it'd be really interesting to see, do you think financial services needs legislation to ahead of the transaction for fraud, or do you think it would be better served leaving it to the firms and businesses to work out?
I think my answer would be the latter, not the former. If I'm taking hits on my business because I'm paying out on fraud and I've got to reimburse folk, I need to be, that should just be the thing I do to try and stop that. So I would absolutely expect anyone in that payment chain to be so serious about sorting fraud, they get on with it. I sort of say that and think, well, then why haven't we seen a faster rollout of confirmation to pay and stuff like that? And I know there are lots of dynamics here, but at the end of the day, if I'm going to serve my customer well, then I should be trying to thwart it, and it should be my commercial imperative to do so. I do know, and I'm not an advocate of regulators stepping in and making the industry do stuff. I've been at the sharp end of that, having to do stuff because the regulators told me to do it. What I do know, though, is that the industry doesn't get itself together. Our good friends from the PSR will stand up and make people do it. And so much better that as an industry, we do all we can to thwart fraudster without the need for regulatory intervention. But if we don't, it'll come.